morning and welcome to Charting the Markets on Friday, the 1st of March 2024. Equity markets continue to make record highs, not just in the US, but also in Japan, where the Nikkei 225 has now risen above the psychological 40,000 mark. And the DAX 40 in Germany looks to be on track for its sixth consecutive day of record highs. So far, everybody wants to buy into these rallies, despite these sharp advances we've seen over the last few days, especially on Thursday after the US PCE inflation data, which is the Fed's preferred inflation gauge, came in exactly as expected. Now, earlier this morning, though, we just had numbers out from the Eurozone, and their inflation remains stubbornly high. Eurozone inflation came in at a higher than expected 3.1% in the core reading, and a higher than expected 2.6% in the headline inflation rate as well, despite inflation for Germany, France, and Spain yesterday and the day before coming in as expected or lower than expected. So in general, the Eurozone is still finding it difficult to bring the inflation rate down towards the ECB's 2% target, despite energy and food costs coming down in general. That has led to a slight dip in the advances we've seen in equity indices earlier this morning. But let's begin by having a look at the FTSE 100, where we can see this far more clearly. And you can see here that we did rally towards the 7,700 mark here, but then on this week, stronger than expected Eurozone inflation data have actually come off again and are now trading back below this February to March downtrend line at the moment. Now, the pattern I can make out here on the daily financial bet of the FTSE 100 is potentially an ABC Elliott wave correction, which would mean that the FTSE 100 is expected to rise back above the 7,750 February high and probably test its December high at 7,769, provided we stay and remain above this week's low at 7,596. Because once this corrective three-wave pattern is over, you should get a new impulse move to a similar degree as the preceding move that we saw from the mid-February high to the 21st of February high at mid-February low, sorry, to the 21st of February high at 7,750. So further upside likely in store, even if short-term today at the end of the week, we could see some profit taking in other European indices, also perhaps putting a damping effect on the FTSE 100, which tends to underperform, as you can see here anyway. But as long as we stay above this week's low, the momentum to the upside should continue in the next few days and weeks. Talking about the DAX 40, as I've just done, you can see here the German stock index made a new record high for the sixth consecutive day. And here we basically touched upon the 17,800 mark, but are now coming off on that higher Eurozone inflation reading. Perhaps we're heading back towards this uptrend line, going back to the end of February, which comes in around 17,712. So that's minor support. But you can see here that investors continue to flock to the German stock index as the latest earnings season showed that European stocks remain undervalued compared to their American counterparts with regards to earnings per share or EPS. And this has attracted further investment in Europe's largest economy, and hence the German DAX 40 index, as you can see here, very sharp acceleration to the upside seen in the course of this week. Now, technically, the trend's your friend. So basically, as long as we stay above the last reaction low, and I have to go a long way back for that to be seen, that is to say the 20th of February low at 17,020, as long as we stay above there, the long-term uptrend remains very much intact. Now, we are trading around 700 points above that at the moment, so it doesn't really help us. And as I say, perhaps the uptrend line might be the first support, but basically, as long as we stay above yesterday's low at 17,573, the trend is your friend. That is still pointing up. And in the US, the story is quite similar. If you look at the Nasdaq 100, we had some negative divergence worry us slightly over the last few days, because you could see here that the high seen last Friday at 18,097 did not get confirmation by the relative strength index, and we are still trading at a lower level on the relative strength index than we were back in the beginning of February. So we may still see a negative divergence. In this case, it would be triple negative divergence, because earlier this morning we hit a new record high and also did so. No, actually, we just did it in after hours trading from Thursday earlier this morning. So I have to see whether we make a new high today in the Nasdaq 100, a new record high or not. But here, the last reaction low is basically Thursday's low. So if we were to fall through there, it was made at 17,791. We could still see a topping out pattern emerging on this chart. But unless that happens, the trend's your friend, and it's still pointing upwards. The US dollar regained some of its recently lost ground in the course of this week. It actually appreciated quite nicely against a lot of currency pairs, as this PCE inflation gauge came in as expected in the US, and as investors are looking forward to next week's unemployment data in the US. And you can see the euro against the the euro against the US dollar coming off again on this stronger US dollar. We are once again trading below the red line here, the 200-day simply moving average at 108.30, and have held over the last couple of days around 107.97. But we seem to be heading back down again towards the support, and if we were to fall through it, we could slip back towards these lows seen back in December and also early February between 107.24 and 7.23 as the US dollar continues to strengthen. For the bulls to be back in control with regards to euro dollar, what we need to see is a break through this December to March now downtrend line, and also rise above Thursday's high at 108.56. In that case, we could see a continuation of the advance we saw since mid-February of this year. But right now, we seem to be weighing on this currency pair, and it looks as if euro dollar is likely to slip further. And if you look at the British pound against the US dollar, the story is quite similar, in that we did actually bounce off this long-term uptrend line going back to October of this year, last week and the week before, but are now slipping back towards it. As you can see here, are approaching this uptrend line, which comes in around 126.07. If we were to fall through there, then the next downside target would be the 125.97 mid-January low, and also the 200-day simply moving average here in red at 125.78. So these are potential downside targets for today or next week. But as long as we stay above the February low at 125.19, we may actually see a continuation of the gradual advance we've seen in the British pound against the US dollar. But short term, it looks as if the US dollar strength that we're seeing is also putting cable under pressure, as we can see here on this chart. Another interesting chart is the euro against the Japanese yen. We had a slip down yesterday to a low, which was a sort of near 2-week low at 161 yen and 69 sen, which incidentally was very close to the mid-January high, which acted as support. And that happened as we had comments out from Bank of Japan members saying that we may well see a rate hike this year, as wages will soon be determined for the year ahead by Japanese companies, and these are expected to come in higher than was perhaps anticipated beforehand. So we'll have to see whether that will actually be the case or not. And we did have a bounce back in the euro against the Japanese yen as the situation normalized once again, and the comments on Thursday by those officials from the Bank of Japan were seen as verbal intervention. But as you can see here, even though we did rally back to about 163 yen, we started to come off again as perhaps a minor top is now being formed. If we were to therefore fall through Thursday's low at 161 yen and 69 sen, we would most likely slip back towards the January to March uptrend line around 161 yen. And then we'll have to see there whether we can hold there or not. But short term for me, this is still a topping formation. And this story is similar with regards to dollar yen, where we also slid yesterday and fell all the way to 149 yen and 21 sen before bouncing back again. But as long as we stay here below the mid-February high at 150 yen and 88 sen, for me this is just a sideways trading pattern, and it looks as if that is still pointing towards a retest of this December to March uptrend line, and perhaps also Thursday's low in the days ahead. So we could basically slip back down towards the 149 yen area, provided we stay below 150.88. The stronger US dollar hasn't had a negative impact on the gold price, because if you look at the daily financial bet of the spot gold price, you can see here that the gold price has continued to rise and has now broken through its December to February downtrend line, and yesterday closed above it on the last day of February, and today continues to head towards this key resistance area between the mid-January and also the early February highs between $2,062 and $2,065 per troy ounce, as the second largest importer of gold. China seems to be buying up gold supplies according to a Reuters report. So here we are now trading not just above this December to March downtrend line, but also above the orange line here, the 55-day simply moving average at $2,035 per troy ounce. And basically, provided we stay above this week's relative low that was made on Wednesday at $2,025 per troy ounce, and it's a relative low because it's lower than the one to its left and to its right on this daily candlestick chart. So basically, as long as we stay above $2,025 per troy ounce, further upside is likely to take us towards this 2062 to 2065 band that we traded in at the beginning of this year. Another not so interesting chart is the Brent crude oil chart. As you can see here, Brent crude oil just trading sideways and treading water, continuing to oscillate around the 200-day simply moving average here in red at 81.97 on this front month futures contract, as the hopes of a ceasefire in Gaza flare up and then get quashed again and again. And we saw this all through this week. But with regards to the actual price chart, we can see that we have a slight bias to the upside at the moment, taking the Brent crude oil price back towards Wednesday's high at 83.11. And if we were to rise above there, we would once again head into this key resistance area made up of the mid-November to February highs between 83.79 and 84.58, which may once again act as a resistance area in the days ahead. So we'll have to see whether that is the case or not, because if we were to break through and close above this resistance area and above the 84.58 late November high, we would then be forming a long-term bottoming formation and could head back up again towards the psychological $90 area or even higher. Now here, with regards to the short-term chart picture, basically as long as we stay above yesterday's low at 81.49, further upside is likely to be seen in the days ahead. And last but not least, let's have a look at the natural gas price, which dipped down to multi-year lows before US gas producers basically cut their production, and that led to a rise from this 161 area, the front-month futures contract low from the 19th of February, and has led us to rise to around 194 yesterday. And we can see that this three-legged upward correction is perhaps just an ABC correction, in which case a further decline could take us through these lows that we saw in the middle of February. But short term, we may continue to rise towards the psychological 2 area and have to see whether we can break through that. Because if we do, And if we then also rise above the last reaction high, the 1st of February high at 216, we could see a more significant medium-term bullish reversal taking shape. But right now, that is not on the cards as yet. We are just continuing to grind higher, and we'll have to see how we react around the psychological 2 mark with regards to the US natural gas prices. Thank you very much for watching Charting Markets with me, Axel Rudolph. Please feel free to follow me on X. My handle is @AxelR_IG. Have a lovely weekend.